Okay, hi and welcome everyone. We are going to start the webinar today. The topic is investing in the future of AI for artificial intelligence, covering some of the trends and the challenges and where we think there's some opportunities here. Before we begin, just a general disclaimer that the information provided and financial products discussed are of general advice in nature, and this means they don't consider your objectives, financial situations, or needs. Accordingly, you should always consider the appropriateness of information, and this is not an invitation to invest, nor is it a recommendation to buy or sell investments. We always recommend that you seek independent advice and ensure you fully understand the risks before trading and investing. My name is James Woods, and I'm a portfolio manager here at Rivkin. A brief outline for you. We'll discuss recent developments in AI. We'll look at what the pros and cons are of these developments, and we'll run through some of the stocks that we think are very important to watch in this space, and then a little bit of time at the end for any questions. So to start off with, AI in its early infancy has actually been around for 60 to 70 years. This started with the inception of the Turing test by Alan Turing and some AI programs in the 1950s to 60s, which really opened up the potential for machine intelligence. Later on in the 1980s, we saw an increase in technology and expert systems where we was able to emulate and replicate the decision-making of humans. But it was very limited and not able to scale at that stage in terms of the technology. The 90s saw a big shift. Really, this is where we saw a lot of machine learning start to come in. Algorithms and logic and code around decision trees and neural networks really began to get quite popular and gain a lot of attraction. But since then, the growth has really been exponential, particularly since the 2010s. This is where we saw a revolution in deep learning. So tools like TensorFlow and some other platforms started to emerge. And this is where we started to see AI outperforming humans in tasks, including image and speech recognition, as well as other things. If you think about your mobile phone, you've got an iPhone, you speak to Siri, or use Google Assistant, or you have an Amazon Alexa in your home, or even something as simple as having an automated robot, the Roomba cleaning the house. All of this is tied into AI. But really, in the past few years, this is where we've seen this breakthrough in reinforcement learning. And one that has certainly been grabbing headlines this year was ChatGPT, which is a chatbot based on a large language model. However, this has really started to prompt a lot more concerns around the ethics of AI. And what are the potential benefits and weighing off those risks in terms of robotics and automation. But since then, we are starting to see very much exponential growth. If we look at chatbots like ChatGPT, the first model, or GPT-3, to where we are now 3.5 and model 4, the increase in its abilities are not just doubling, they're growing exponentially. We see virtual engagement, content creation, self-driving cars and road safety. We only need to think of Tesla in that example, but also in terms of augmented reality as well. We're seeing companies like Meta shifting towards this augmented reality and metaverse, but as well as advancements in medical diagnosis. I'll go through there. So in terms of when we think about automated vehicles, most cars, the last 20 years at least, have had basic cruise control systems. But there's always been this hope of that we would have autonomy with self-driving cars. And we are now starting to see that, graduating from the simple systems like your cruise control to models of technology that Tesla have released where you have full autonomy. So you don't need to be sitting behind the steering wheel for the car to be driving. And that has profound implications. If we think about the transport system and logistics, the potential to have self-driving trucks, In the US now, it's testing automated ride-sharing taxis, and how that will affect things like urban planning and how our cities and countries are designed in the future. Some of the big pros, healthcare is a massive beneficiary of AI. So it allows medical professionals to accurately diagnose diseases much quicker using vast amounts of data that they might not be able to pick up themselves. And this includes using image recognition in terms of drug discovery and simulations, as well as patient monitoring as well. In industrials, automation in terms of process, we look back to the Industrial Revolution and the productivity gains that had for industries was a massive boom, and akin to the Microsoft Office suite and Excel and the internet. AI has all of these potentials to increase productivity, precision in our manufacturing, reduce wastage, and predictive maintenance as well, which can all drive profits and save costs at the same time. Entertainment will certainly be a big one in terms of personalized content streaming. So think Netflix and think Meta, dynamic game engagement, and the composition of music and art as well. But also, this transition to clean energy, green artificial intelligence will also be very important. Allowing us to monitor the environment, track endangered species, conservation efforts, how we manage and track pollution, all big beneficiaries of developments in AI. But while there's lots of benefits, and we could talk about that forever, there's alternates we need to consider as well in terms of the cons. So ethical concerns are particularly around privacy, potential for surveillance, facial recognition. There's a really thin line there when we talk about protection versus invasion of our privacy and how that data is used by corporations and governments, as well as concerns over hackings and things like that, having access to the information. Algorithms as well, there's concerns there because right now where AI sits, with these trained algorithms, it can reinforce biases unintentionally. So if we're looking at hiring or financial services and lending or law enforcement, this does have the potential to marginalize certain groups, reinforcing behaviors. Economic displacement as well. This is definitely a concern. So automation, is that going to lead to significant job losses? How's that going to affect people in manufacturing and customer service and transport, etc.? And they're very valid concerns. But again, if we look at historical precedents where technology was changing and we did have these concerns, the invention of the internet was meant to pretty much kill off demand for the postal service. However, what's actually happened in reality is demand for online ordering through companies like Amazon has now seen the postal service be busier than ever. And we look at Excel, the introduction of that Microsoft Office suite as well, making tasks more efficient. It didn't actually lead to job losses. It created this increase in productivity and this demand for skilled labor. But we also have to consider other things. Something that's happened more recent years is certainly situations like deepfakes and misinformation, and how do we consider the accountability of AI decisions and those behind us. So a lot of considerations there in terms of our everyday life, but that is quite separate when we talk about investing in this sector as well. Some of the stocks to watch, there's hundreds of stocks which are tied into the AI theme, whether they're a pure AI play or just a beneficiary of it. So we've selected some of the most common ones that you will have seen in some headlines, as well as ones that might not be so obvious. Nvidia is probably top of everybody's list. That's grabbed headlines all year. Microsoft, most people are familiar with them. Palo Alto Networks, some might be familiar with. This is to do with cybersecurity. Adobe might not be at the top of people's lists when it comes to benefiting from AI, but they are set to be a big beneficiary. Google, similar to Microsoft, very much tied in with AI. And one that is a little more obscure, C3AI. So starting with NVIDIA, I was founded back in the early 90s, and it in recent years has very much been tied to AI, but that's not actually how it started. It's really around designing graphics processing units, which were computer chips used for gaming. Recently transitioned more into this AI space because it was able to leverage those processing unit capabilities for the vast sum of computations that are required within AI. It's definitely positioned as a leader in terms of the hardware required for AI, and it's certainly been venturing more into automotive AI. Particular growth areas, their data center and some edge computing as well. But really the demand and what has driven their share price is, well, it's the high quality and the high performance of the chips they produce, as well as the significant demand to upgrade legacy IT and to incorporate artificial intelligence into businesses. So it is very much a pure play, within the AI space, and it's benefiting from those secular tailwinds, as well as this shift to the cloud and electrification when we think about EV vehicles. Definitely maintains a strong market position in the AI server and GPU market, and it currently is the only end-to-end AI system product that has the stacked hardware, software, and ecosystem support as well. So very much a pure play. And as I touched on, that demand for their data center segment is expected to grow over the next few years at a 20% annualized rate. And that's why the stock is trading at such a high valuation multiple at the moment. Recent updates from them, they had stellar Q1 reports. Q2 was even better, particularly as we did see a revision from management in terms of their guidance on increased demand for these chips and their data center. This is really all tied in with the many companies now incorporating AI into their business, and there's big infrastructure needs as part of that. And they've been very efficiently able to scale and meet that demand with supply. Revenue is expected to grow in the coming years. Main segment, data center, as I said, 20% annualized growth rate. Gaming also expected to continue there on demand. And overall, this growing appetite from companies just incorporating AI in there. Its auto segment is much smaller, but is expected to grow very rapidly, around 30%, as it ties in with a few partnerships. And just to show some of those expectations when we look at forward estimates of revenue and earnings per share over the next 3 years, a double and tripling of those metrics, and all of this factored in by the market. Understandably, the share price has outperformed significantly. It's currently up 233% over the past 12 months, and that compares to about a 15% gain for the S&P 500. Next, over to Microsoft, founded back in the mid-1970s, and really well known for its Windows OS and Office suite. More recently, it's been tied in with AI because of its Azure cloud platform and the demand for servers that's needed. It also was an early investor in OpenAI, which is the parent company of the ChatGPT product. It's also developed AI chatbots for its customer service. It's introduced some machine learning tools, and it's also announced the release of its Copilot AI integrated software into its Office suite, which is expected to drive around $5 billion in additional revenue. Really, they hold a very commanding position. They compete with Amazon Web Servers in the cloud computing space, but it's very dominant in that public cloud infrastructure. And therefore, they're likely to have a key place going forward as part of that demand for companies as they integrate AI into their business. As I touched on earlier, release of Copilot, so that's the integration of AI into the suite, is expected to lead to around 5 billion in increased revenue in the first 12 months alone. Not only that, in terms of a company, it's not a niche, it's not playing on one theme. Microsoft is very well diversified across its portfolio, and therefore it's seen as a little bit of a safe haven in terms of the stock market when you do see some turbulence. Overall, its intelligent cloud segment, that's around 40% of its revenue, is probably looking at 20% annualized growth in the next 5 years. The business process division, which makes up a little over or around a third, is looking at double-digit growth, and that's on that expansion of Office 365. And margins are expected to stay above 40% over the next 3 to 5 years, which is highly encouraging. And another supporting theme for Microsoft has very much been this switch to hybrid work and work from home, particularly in terms of demand for OneDrive and sharing programs and files, but also in terms of their team's capability, connecting people working remotely or from the office. And again, you can see some projected revenue and earnings forecasts there, much more consistent. We're not seeing the sizable increases that we did with NVIDIA, but that's what we would expect with a company like Microsoft. It is a little bit more consistent there. And when we look at the share price over the year, it's up around 30% in the past 12 months compared to the S&P 500. So about a 100% outperformance on that basis. Palo Alto Networks, this one is probably not at the top of everyone's list, but it is one to watch. It's tied in with cybersecurity, so next generation firewall technology. When we think about AI and the potential for cyber threats and what could occur there, this is certainly a stock to watch, and a sector or a segment in terms of cybersecurity likely to be a big beneficiary there. Their solutions, Cortex, place them in a very strategic position and allows essentially assessing real-time threat intelligence, detection, and mitigation, so responses to those threats as well. Other companies that you could look at in this space are Cisco and Fortinet, but overall Palo Alto Networks has very robust top-line revenue growth and has a very commanding position in the market for the firewall and cloud products. In 2024, it's expected to grow strongly, particularly in its subscription products as well. We've seen a big shift in recent years towards more subscription products and reoccurring revenue as a result. But overall, if we look forward to the next several years, it's this trend of merging security vendors, updating hardware and legacy IT, and the inclusion of those cloud-based products that's really likely to support growth here, which in terms of sales growth is expected to grow in the double digits. In recent years, this is very much more a growth company rather than an established company like your Alphabet or your Microsoft. And you can see it had been loss-making in terms of earnings per share in the past few years. In financial year 2023, that has now flipped positive, and we are expected to see a doubling and tripling in earnings per share, on improved margins, and revenue is expected to grow relatively consistently there. And you can see as a growth stock, it is much more volatile than some of the other names we see. It certainly has outperformed the S&P 500, up 39% over the past 12 months. But as you can see from that chart, the volatility is quite heightened compared to some of the other names. So considering a name like this, and some of the more speculative names, certainly be allocating accordingly with a smaller portion of your capital. Adobe, this is an interesting one. It doesn't always come front of mind when we're talking about AI. They started out in the early 1980s. We're all familiar with PDFs and creative software like Photoshop that they have. Really, their AI and machine learning platform, Adobe Sensei, has gained a lot of traction recently. And that's because it's got these intelligent features incorporating AI, like auto photo editing into Photoshop and smart tagging as well. And that's really important because it improves the user experience significantly and therefore creates that demand for their product. It also speeds up that creative process as well. So for a name that is already so important in that space, Adobe has a commanding position. Their product is improving, and that should be very supportive for them in the years ahead. Recent results have also been very impressive. And over the next 12, 24 months, its digital media business is expected to remain steady. That's the main source of their revenue. Certainly there's some economic challenges ahead, but sales is expected to grow somewhere between 10 to 12%. And that's important because it accounts for its digital experience unit, accounts for around 25% of sales. They're expected to see low double-digit growth. But more recently, we did see positive earnings and positive guidance from them well in terms of margin expansion and expected demand. Similar to Microsoft and Alphabet, we're not seeing a tripling or a doubling in earnings per share forecasts in the coming years, but we are seeing that consistent growth there as well. In terms of relative performance, share price is up very strongly, rallied very hard over the past 6 months. It's up around 78% in the past 12 months as well. So, great company, good quality, certainly like it tied in with this theme. With these names, when they do get overexcited and there's lots of hype and we see share prices shoot up like that, certainly advisable to think about scaling in exposure rather than going in with a lump sum. You could look at strategies like dollar cost averaging into some of these names, adding in a little bit of money on the way up, but really looking to buy more into the dips. Alphabet, name that everyone's familiar with, household name. Started out in the late 1990s as really a search engine that we're all familiar with. But more recent years has expanded, like Microsoft, very diverse portfolio in terms of its offering. They, in recent years, acquired DeepMind, and that incorporation and the research that's come from that has been quite groundbreaking in terms of their AI development. It's transformed their business when we look at Google services in terms of search accuracy, efficient ad placements. Ads are a significant revenue generator for Alphabet, and AI-driven products like your Google Assistant. They also recently launched Google Bard, which is a competitor chatbot to Microsoft's Bing and ChatGPT. There was some mixed results initially on the launch of that, but subsequent improvements have been improving the experience there as well. And so far, it doesn't seem that Microsoft's Bing or ChatGPT has posed an imminent threat to Alphabet's revenue as well. Looking ahead, as I said, a real key driver for Alphabet is their advertising segment, and certainly exposed to global fluctuations. When the economy is not doing so well, that's when businesses are really pulling back on advertising. So they are sensitive to that, but in terms of the stock market, this is considered a very diversified company and a little bit of a safe haven like Microsoft. And so far, as I said, ChatGPT and other chatbots haven't had a material impact on its core search business, which is worth around $160 billion to Alphabet. Looking forward, where are the opportunities? Interest around visual search in terms of their advertising rates. But it is worth noting that despite some recent workforce reductions, and this isn't specific to Alphabet, we did see a lot of layoffs in 2022 for US tech companies. They are expected to make substantial investments, not only in search, but also in cloud and its YouTube divisions as well. So might see a bit of a short-term squeeze on some margins there. But overall, really strong company, really quality company that we do like. And when we're looking at themes like AI, we always think diversification is a good approach. So holding more stable, established names like in Microsoft and your Alphabet, which might take up a large part of your portfolio, and then tying in some of the more speculative names like a NVIDIA or a Palo Alto Networks in there. And again, similar to what we were seeing with Microsoft, relatively consistent increase in both revenue and earnings per share over the coming years, and strong performance. Alphabet is a significant weight within the S&P 500. It's part of the Magnificent Seven and really helps account for a lot of those gains, and up over the past 12 months, just over 30%. The final name, this is just a little bit more interesting because this is probably one that's not at the top of people's radars, is C3AI, which was launched in 2009, originally with a focus on energy management and sustainability solutions. It did pivot towards enterprise AI, and it now offers a suite of software to bring AI into core business processes across a wide range of industries. You've got CRM management, you've got supply chains analysis and data logistics, within financial services. It's got identification, smart lending programs. So, very much a core AI software company. It fits in with SaaS, which is software as a service application, allowing them to deploy and run those applications. It is in a partnership with Alphabet in terms of developing some of those new applications for Google Cloud, and its current applications are also available through Google Cloud. Looking forward to the future, this is very much a growth company, highly volatile. It's broadening its application offering and aiming to serve the various sectors and develop and expand the product suite that they have. But we are seeing some declining gross margins on there and reduced operating margin, and expect to see some weakness in revenue in the coming years. So certainly a much more speculative name. And you can see that here, not only tied in with the share price, swinging from a roughly 250% gain in the past 12 months to now at around 88%, so still outpacing the S&P 500. Revenue is expected to tick up in the coming years, but it has been running at a loss in terms of earnings per share over the past few years. So still very early stage, but by 2026, expected to be in positive earnings per share. There are some other ways. You don't have to pick individual names within AI. You can look at diversified ETFs, which are a really simple sort of set and forget solution. You've got Global X Robotics and Artificial Intelligence. The ticker is BOTZ. iShares Robotics and Artificial Intelligence, IRBO, so very similar there. And you've got Global X Funds, Artificial Intelligence and Technology with ticker AIQ are just some, but there are dozens of diversified ETFs that are available to give you exposure to this artificial intelligence theme. That's the end of the webinar. I do have some time for questions if there are any, so I'll just switch my microphone off for a moment and see if we get any questions. Okay, looks like we haven't got any questions, so hopefully that means I've done a good job explaining this topic and introducing AI and some of the names to watch for you. A couple of points, please keep an eye out for the post-webinar survey that we do send out. It is very important, the feedback we get on these in terms of the content that we cover and the style. If you didn't catch all of the webinar, please don't worry, it is recorded and we will send out a copy to your email. Other than that, thank you very much for attending and we look forward to speaking to you next time. Any more questions that you do think of afterwards, you can get in touch with us on the details on your screen. Thank you.